Hello, everyone. Welcome to How to Trade. I'm Shane Vernier, and this is the U.S. Mid-Session Brief. Today, we're going to cover the week ahead, what exactly you can expect out of the markets, and what exactly we are witnessing right now, which is pure history. It's one of those things where you decide to go on a vacation for a week, and the entire world changes. We saw the biggest week of stock market volatility that we've really ever seen. The bearish volatility reminded me of Arab Spring, trading crude oil in Arab Spring back in the day, back in 2011 when I was first starting out. And all honesty, it was tough to be on vacation when you saw such volatility in action. So congratulations to those of you that have been very profitable over the last week. I mean, this was one of those 10-day stretches, one of those weeks when you could people, retirements were made, millions were made, and, also millions were lost. So we've got to really keep our eye on the prize. I know the margins have been challenging for a lot of you. You tune in, your intraday margins are being changed dramatically, seemingly by the hour. I'm getting emails all the time from my brokers saying margins up, margins down, margins up, margins down. So I understand completely what you're going through if you're a bit frustrated as a retail trader. Today we're going to dive into some markets. Excuse me. We've got a few requests on some markets to hit, but I want to start out with probably one of the biggest things that we do need to address, and that's volatility, and that's fear. And fear gets the best pretty much of everybody at one point or another, but as far as the markets go, fear means selling. Fear means selling. So right now, today, we're seeing a choppy whipsaw session and a lot, really big open, big positive open, and then a big retracement. So a lot going on. So it's good to see everybody back. Let's see. We've got so many names in the YouTube channel. Good to see everybody. Let me see Anchor, Trading Musk. Good to see everybody. Let's see Bobby Bob. Always a pleasure. Bobby Lita inside of the How to Trade trading room. Tuku, good to see you. Mark Corp. There's just a lot going on, guys. So let's just get right to it. You can see right here, this is the biggest chart. This is one that I've been watching really religiously over the past 10 days. And what we really have here is we had that big crash last August. This is the volatility index. This is the VIX. We had the big crash last August when the Japanese carry trade unraveled. And then you saw what we've had in the last week or so when the tariffs have gone on the board. We knew that it was going to be a big deal. We knew tariffs was going to be a big deal. And, it's just driven the markets absolutely crazy. Now, remember, the volatility index, the VIX, this is the Wall Street's fear gauge. This is what everybody's looking at to try to figure out what exactly is going on in the markets. And anytime you see a big step, but really I call them sticks, but you see a big spike or a big stick like that north, there's a lot of angst. Why is that? Because we're pricing in deferred month S&P 500 options contracts. We believe that the volatility is just getting started. It's not over. However, things have definitely slowed down in the last few days. Excuse me. Man, it is dry up here. I've been on the beach for the last couple of weeks or 10 days. And back here in Dillon, Montana, we're up about over a mile high, and the air is definitely dry. At least it's sort of a stiff throat. In any case, this right here, we all knew that. COVID, that's COVID craziness. And then what do we have right there? We've got basically the two highest VIX readings since COVID craziness, and those have come August and this month. So remember, when the VIX is up, that typically means that the markets are down. There's a lot of selling, and there's definitely a lot of that going on today. Interesting day in the markets too. So I had some questions. We definitely wanted to look at that NQ contract. What exactly is happening here to the Nasdaq? I mean, what isn't happening to the Nasdaq? This is your E-mini Nasdaq futures contract right there for June. Interesting. I mean, to say that this market is active is an understatement. And so when we start talking about Nasdaq futures, we got some questions there. US 100, everybody wants to see Apple. US 100, Tesla, of course. We've got sort of been waiting on our buy. I thought we had an opportunity maybe to buy Tesla in our 920 crossover. Still hasn't developed, so Tesla not quite in the kill zone yet, or the buy. But Apple's one of the big movers and shakers. Everybody's wondering, what's going to happen to the prices of an iPhone. Well, you sort of had a bid back here. That one got swept out if you're trading 920 crossovers. But this is interesting stuff right here. I think that we're in a position potentially maybe to get a 920 on the daily. And that's when the 9 EMA crosses over the 20. Clearly our RSI, relative strength index, we were in oversold territory. We got a lot going on here, guys. I'm on a buy on Apple. I want to buy it, but we've got to wait until we get our crossover, and then we send them. It's that simple. Dave, F19, good to see you, Dave. Yes, sir. Hey, Lewis, good to see you. What's up? A lot going on, guys. Absolutely a lot going on. Anchor, good to see Anchor. when we talk stocks and we talk about all these different ways you can trade, it's just important to understand where you can trade. So be sure if you want to trade CFDs based on some of these stocks, you got Tesla right there, UK 100, US 100, US 30, whatever you need, head on over to switchmarkets.com. They've got you covered. Now, as far as the Nasdaq goes, we talked about an epic shift. Really an epic shift in the market dynamic, and I was pretty adamant about what we thought was going to happen here with the Nasdaq. We really had that key level. I believe March's low was probably the biggest technical level we've seen for U.S. stocks in a long time. And once that level was taken out, we were on a sell. We had a sell trade idea, and it cashed in relatively easily. My only regret is that we didn't hold it and maybe made enough to buy a boat, maybe a boat or a condo or an airplane or something. But it was a pretty darn good trade, pretty nice washout underneath March's low. So right now, E-mini Nasdaq, all right, Nasdaq futures, NQ futures. We'll look at the US 100 market here in a second. You can see the month is interesting, isn't it? It's panning out to be probably a push month. And that's crazy to say after the volatility that we've seen. But right now, we're in the 14th day. Tomorrow's tax day here in the United States, the 15th, April 15th. If you're in the States, you know it, you love it. It's your favorite day of the year, right? Good. I could go off on an hour just talking taxes and how bad they were to me this last year. But hey, we got to do our fair share, right? In any case, tomorrow's tax day. But that means that a lot of folks may or may not be holding on to these longs, hoping that the market rallies back up to these all-time highs. Now, what I mean is, listen, that's a major sell-off and a major washout, but there were bidders down here. There were bidders down here and a lot of them. So we've seen big-time rallies. Are people holding? Are people selling? I think most of retail's already washed out that we're holding longs. Now they're looking for another entry point to get in, and a lot of that's going to depend on our short-term stuff. So let's take this right down to a daily chart and see where we're at as far as the Nasdaq goes. And sort of interesting, isn't it? Nice big moves. I mean, those are robust moves, big, bold moves. And then you sort of got the markets to base a little bit. Then you got a big rally right there. That was the monster rally. That was the huge record-breaking rally on Wall Street. And then we've traded inside of that. So if I'm trading this week and I'm waiting to really commit to this market, there's a big key level that's on my radar, and you guys need to know it. Let's see right here. It's going to be last week's high. No question about it. Right there's a top. Remember, this is the futures contract. You're looking at 9,386.75. You've got a double top 9,383.50. That's big. So I'd be looking for a break over 19,385. If you do get that break, you've got to be bullish here, playing the pullback. That being said, we opened decisively higher today. The futures contracts opened higher. Since then, it's been just blood red. It's been blood red, and the reason why is, well, maybe, just maybe, there's going to be more tariff escalations in the near future that nobody's ready for. These are crazy markets. But as far as I'm concerned, a couple of things that I would definitely be looking at. From a weekly perspective, the weekly really shows you where the key levels are. Right there, bang, bang, bang. And now you're looking to get that buy, maybe to play that washout above last week's high. That's a great scalp. I mean, if you do get to that level this week and then NQ does print right above last week's high, you're going to blow off some steam because retail, there's a lot of retail shorts that developed right up in here after that doji. Then the trade war started, then bang, they're still holding shorts. Could definitely get washed out above last week's high. And I have to be honest with you, with this kind of volatility and action in the market, you've got to really believe that if we break above that, we're going to go up and maybe just rally back up into this area. Pretty serious stuff, guys. Pretty serious stuff. So if you're trading, be careful. Be careful. As always, be careful. Let's see, I'm way behind on the live chat. So over on YouTube. Hi, Euro Kiwi. Yeah, I will absolutely look at the Euro Kiwi. We also had another request for U.S. oil. U.S. oil's interesting. My favorite market. Before we get to U.S. oil, though, let's go ahead and look at the U.S. 100. I think that as far as CFD contracts go, this had to have been one of the most heavily traded over the past week, 2 weeks, 3 weeks, maybe over the past couple of years. But US 100, so what do we have right here right now? Big sell-offs. Those are big moves. -3%, -9%, and then you turn around and get a 7% rally. This is crazy stuff. Do I want to be long or short? Long or short? It's hard. I don't believe that we're done going down. You know, I sort of posted it on X last week when I was on vacation. I said market's 30% correction minimum. I still believe that. The problem is you don't really have any way to get short right now with any sort of meaning. You're not going to be able just to get short and hold it. The volatility is too big. The daily ranges are too big. It's just too big. It's too big to play these. You got to be smart about what you're doing. So if I wanted to get short and I was going to get serious about getting short, I always love my macro levels. Monthly chart right here. No question about it. Spike high, spike low. If we pull back somewhere into this zone, 19.9, of course, 19.296, more than likely. I would much rather be short than long right now. However, these markets are going to change dramatically, especially if we break above last week's high. If you break above last week's high right there, you're going to flush a lot of shorts out, and more than likely you're going to get a nice pop, and that's probably where my 19.9 will come into play, my 19.5 sell, and we'll have a trade idea out for you probably. Maybe not today, but I want to give these things a day to settle, just back in the saddle, so you're probably going to get a trade idea tomorrow, but this should be pretty good stuff. Pretty good stuff for a nice sell. I'm just waiting for a bit of a pullback, but right now it is crazy. Make no mistake, it is crazy. Okay, U.S. oil was the other one that I was asked to do, and then we'll go ahead and do the Euro Kiwi, and then I got to look at gold, and then we got to look at the Swissy too. We got a lot to get to. All right, right here. You can definitely see what's happening on this crude oil chart. Now, this is a chart that you haven't seen anywhere else in finance. This one I probably should just get it tattooed on my back or get it trademarked or something, because no one else in the crude oil markets is even talking about this chart and this sequence of events. Remember, the COVID lows. If somebody comes up to you and asks you, what was the low of crude oil during the COVID era? Be smarter than the economists. Be smarter than the college kids. Tell them, no, it was negative 40. It wasn't 0, and it wasn't 1 cent like your chart says. It was negative 40. That's what crude oil was trading for right after COVID, right in that April. That's absolutely huge. April of 2020. Didn't go to 1 cent. It went to negative $40 because there was nobody to take the supply. There was nobody using oil. They shut the world down. Okay, what was the single biggest level in this market? 65. I said it repeatedly over and over and over again. Hopefully, you got in on a little bit of that scalp. That was a pretty darn good scalp right there. Your low was 65 and a quarter last month's low, and you got really a beautiful bounce from that. That's still a big deal to me. 64, 63 is still a big deal to me. Now, there's a lot of bearish market drivers going on. U.S. crude oil production is up. It's up. We're producing a lot of oil now. The question is how long will that take to get to the market and be reflected in global prices? It's going to take a while. It's going to take a while. But when we think about crude oil right now, going into the spring and summer months, that should be a bullish market driver. And it is to an extent. You also have a situation where anytime you see the tariffs get rolled back, you're going to get a bullish bump in crude oil. The idea being that global commerce will continue and that consumption of oil will continue. Okay, that's two big bullish market drivers, but here's the bearish ones. If the tariffs stay into effect, especially those on China, crude oil, that's a bearish market driver. U.S. oil production way up, that's a bearish market driver. 64.63, 64.50, it's a line in the sand. 65 is a line in the sand. I am bearish, 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 and bearish. So if I'm bearish, how do I trade it? Well, I got to figure out a way to trade. I got to figure out an out. I got to figure out where to sell. This is beautiful stuff right here. Nice double top back there, early April, April 1st, April Fool's Day, whatever you want to call it. April 2nd is when the tariffs came down. Okay, you rallied right above 38%. Look at this compression. It's a bear flag. It's a bear flag. Boom. Boom. It's a bear flag. Don't get confused about the oil markets. If you're going to do it, you want to be on the short side of it. Now, our long-term macro level right around 65, I would sell 65s every chance I got. Every chance I got, I would sell it. Now, I don't know that we're going to get a chance anytime soon, but we may. This pullback right here, 38%, this is sort of a diamond formation. I know it's not perfect, but when you're drawing charts and you're doing this stuff, don't start believing that you have to be absolutely perfect. We're not artists, we're traders. Essentially, that's a diamond formation. Big move, bearish move, compression, right at 38%. I'm such a seller up here at 62%. I would be hard pressed to find a trade in the last several years that I liked better than selling up there 65.50, 65 and a quarter to 65.50, 65 even, something like that. I mean that's a beautiful resistance zone. Eventually this market goes down. It goes down in a big way. Now, where would it possibly go? Where do I think it's going to go? Well, if the U.S. continues pumping a tremendous amount of oil and the trade war between the U.S. and China continues, I'm not really worried about everybody else right now. I'm not worried about the U.S. EU. I'm not worried about the U.S. Mexico, U.S. Canada. Those things are going to work themselves out. The big one's U.S. China. That's the big one that's going to really dictate what happens from a global recessionary perspective. So the question to me becomes, where would our next level be? And I would go right down to the level nobody's talking about, -40. It's not going to go that low, maybe. All-time, not an all-time high, but spike high. Nice big spike high. Russia invades Ukraine. Compression break. 44.48 is the next level. That's pretty ambitious. I don't think you get to 45, but I'll split the difference with you. Maybe 55, 54. I'm watching crude oil closely, and I want to be short. I definitely want to be short. Now, as far as, intraday trading on U.S. oil, we could go right here to your 30-minute chart and say, okay, how do you want to trade it? Well, U.S. session, this is been doing this for a while, and I can tell you right there, that's when the volume kicks on about 9 a.m. Eastern. Opening bell, ding, ding. And then you've got really what is, I would call, just a breakaway trend down. We're off about 1%, about 0.96%. And you've got nice compression right there during that midday, I would say early session, and then bang, you're coming off. For me, I would be watching this very closely, this intraday range, somewhere right in here. But you've also got a current wave developing. Prices are near your lower Bollinger Band here. I'm a seller. 61, 38%. We're coming off. We're going lower. So, depends on where you want to be disciplined and trade from. For me, I would be selling 61s somewhere in there and maybe wait for a late day a plunge. But just remember, anything can happen when the news is this active. Absolutely anything can happen. That's for sure and certain. So that's how I would approach U.S. oil. Now, as far as how do you trade equities on a day like today? Well, here's the U.S. 30. And before I sort of went on vacation, we talked a lot about opening range breakouts. Opening range breakout, if you're going to trade the orb strategy, the breakout strategy, and you're going to do it on the U.S. indices, U.S. stock indices, you need to be looking at that first hour of trade is huge for me. I love the 30-minute chart. You can go down to a 15 if you want. I won't blame anybody for doing that, but I prefer a 30-minute chart right after the U.S. Open, so there would be my bar number one. This is a simple two-bar orb, bar one, bar two. That's simple. So what do you got? Well, you got a lot. Bar one, bar two, where's your entry? Confirmation bar is going to be a close outside of that range. Opening 30 minutes, compression, faked everybody out that was buying in, going, oh yeah, we're going to continue the bullish open, and then bang, there's your big sell-off, and now we're becoming compressed. U.S. daily range, let's throw a Fibonacci retracement there. Anything can happen, but if you're short, you're probably on the right side of this one. How did they open? How are we still ahead? Or what happened with our prices? Had a big negative electronic open, and when you get those big opens, it really screws with everything. So you got to be real careful in markets like this, especially after a weekend. Give them some time to develop. Don't rush headlong into these things. It can absolutely clean you out. All right, we'll look at Euro Kiwi here in just a second, but we do have a few other things to go over fundamentals-wise. Bobby Bob makes a great point. Coach, when you were away, Trump tariffs drove the markets crazy. They sure did, Bobby. I wasn't in front of the screen. I wish I was in front of the screen. You sit through so many boring months in this business, and you just wish you could have been in front of the screen to see some of these moves. And you can see right there, this is what's happening right now. Craziness. It's up, it's down. The market's up, it's down, it's up, it's down. You've got everybody's chiming in. Trump's aide Hassett said U.S. got an amazing tariff deal offers. Well, maybe they didn't. Who knows? Goldman Sachs tops estimates on boom in equities trading revenue. Okay, so there's a lot of stock trading right now. Ray Dalio's worried. Everybody's worried. Global recession. Cats living with dogs. It's all going to be crazy. Bottom line is this. We don't know what's going to happen. Now, I've said it a few times about the Trump tariffs, and I'll say it again. They're a negotiating tactic. Trump will put them on, and he will roll them off at his leisure. And it's not just him making these decisions. It's the entire cabinet. It's the Treasury Department. It's the folks that are in there, the financial advisors, and he's got a whole room of them. These folks sit around, they take a look at what's happening. If they believe they need to roll them back, then they'll roll them back. If they want to keep them on, then they'll keep them on. And it really is that simple. We don't know what they're going to do. And if we don't know what they're going to do, you're going to have craziness in the U.S. dollar. Dollar's underneath a 100. Dollar index is sub 100. That's absolutely huge. You're going to have some craziness in gold. I'm going to look at the gold in Swissy right now because they don't know what to do. So what do? You grab Swiss francs and you grab gold to insulate yourself from this type of stuff right here. Stocks are off their highs. We were up 500 points. Now we're up 200. Nobody knows what's happening. This is what the game really is boiling down to, though. And this is why you could definitely see a big-time bullish rally and a stiff recovery. A fast one. May 7th, we'll be here with bells on. I'll be covering that Fed meeting for you. You see right there, you're looking at interest rates being held, about an 80% chance of 4.25% to 4.5%. But remember, we're expecting a rate cut in June, and that's coming up relatively quickly. We're expecting the rate cut in June. Now, I don't necessarily know what's going to happen. No one does. But if you start getting rate cuts and you start getting trade deals, then all of a sudden, things like this US 30, they go through the roof. So remember, our basic game plan with US stocks, especially with the US 30, was very simple. It was very simple. I mean, I drew the line in the sand, and what was it? For those of you that have been watching for a while, 45. And you were either bullish above it and you're bearish below it. I'm still bearish. I think we probably, by the time the dust clears, it will not shock me if we're testing this area down in there. Will not shock me. As a matter of fact, I think that's more than likely going to happen. The question is when and how can we sell? I would be selling pullbacks right now, big pullbacks on weekly charts, especially with US equities indices. However, if this develops and you start seeing maybe a 0.5 point rate cut, these markets are going to absolutely explode, especially if there's trade deals involved. Trade deals and rate cuts, this game's out of here. There's a lot of bidders still around. There's a lot of bidders for U.S. stocks, 2,900 points in one day. I've never seen anything really like that that I can remember. Look at that. That's an 8.5 point move. 3,200 points in the U.S. 30. It's the biggest thing we've ever seen, really. I mean, you're going to be hard-pressed to find another range that big. That's for sure. So definitely a lot going on there. As far as our economic calendar goes today, there's just not much aside from tariffs that are going to do anything to the markets. You can see right here, this is just a good look at your economic calendar. Mondays, nothing really happens on Mondays. It's a good day to sit back. It's a good day to game plan. It's a good day to get your sea legs after being on holiday for 10 days. You've got to really take a look at what's happening from a macro perspective and figure out how you want to attack. That's all this is about. It's figuring out how you want to trade the action, how you want to take your money, how you want to take your billfold and trade it and make it more. That's it. And right now, I'm looking at it, I'm saying, okay, what's happening with the dollar? Okay, the dollar's way down, 99. Dollar index is at 99, okay. Stocks, crazy. Commodities, crazy. How do I want to commit? And the answer is very carefully. I'm going to give this a day to set up. But right here, 3-month T-bill auction, 4.225. That's up significantly over last Monday. 6-month T-bill, 4.060, above 4%. Those are significant T-bill yields. We're not back down in the 2% or the 1%. So in one respect, although the dollar is slipping, that's still pretty good yields. So the U.S. government's still trying to attract money by offering a decent yield. As far as the rest of this goes, there just isn't anything there that I would be too concerned about. So how does all this relate to what we want to do today? Well, I mean, it would be crazy to think that this doesn't impact the gold market. The gold market's been unbelievable, absolutely unbelievable. You can see right there, really the day I left, you saw major selling. I mean, 2.5%, just getting whacked. But it just, I mean, the explosion to the top side is really what caught my eye. I mean, we went right down there. We got a nice doji right around that 3,000 level, and then the market absolutely exploded north. Shouldn't surprise anybody now. If you're not on the long side of metals, at least as a buy and hold move, you're probably playing them. Well, you are playing them wrong, and you probably don't have any money left. So when I'm looking at something like this, I go, well, that's pretty hot stuff. I mean, that's a huge 3-day rally. It's a lot bigger than the 3-day sell-off we saw. And now all of a sudden, you've got 32.50. Now, we talked a lot about 32.50 being a potential key right there, 32.44. I'm sorry I wasn't here. We would have had a trade idea, selling the quarter handle. I know some of you that have been following these streams for long enough probably took that sell in front of that quarter handle, 32.50. I'm not above being a seller up here. I'm not. I'm just being smart about what I do. I mean, listen, there's an old saying about scalpers. If you're going to be a scalper, you're picking up pennies in front of a steamroller. Don't let the steamroller get you. If you try to hold a short position against this gold market, you may win a few times. More than likely, you're going to wind up in the poorhouse or in the soup line. So you got to be real careful with what you do. For me, it's all about being able to buy gold. You don't want to hesitate if you get a chance to buy gold. 38% on the daily, yes. 31, 39, I would be right there at 42, 31, 42, 50. We could get it. We've seen that kind of volatility. We could get it tomorrow. I would love that scalp, looking for $5, $7 maybe. A bigger picture, can we justify the sell? Take a look at where that high went to. 32, 45, 52. If I was going to scalp this, I would want to see a nice stiff test of that 50 level. I'd probably be up there 32.48-ish, 32.47.50. I wouldn't be afraid to take that sell, or maybe 32.49. That might be a better sell. But I would be careful. Be careful holding shorts here. You can get hurt real bad. You can get hurt real bad. Don't hold your shorts. Get out of the way. If it doesn't work, get out of the way. I would much rather buy. Let's look at a 4 hour just out of curiosity. I mean, you can't really do anything Fibonacci's up there. Let's try this, though. What's our 920 EMA telling us? 4 hour chart, 920 EMA on gold. That's a beautiful thing. Oversold territory. There's your buy. That's fantastic. Absolutely fantastic stuff. So when we're looking at a systems play, now we're in overbought territory. If we can get that 9 to cross underneath the 20, we'll get a sell signal here. I don't particularly like it, though. I don't think I would be taking that 920 sell. I would look for the next 920 buy. You can see right there. I mean, that's really just a beautiful thing. Buying right down there at 30.80, and then you're rocking up there at 3,200. That's how fortunes are made. That's for sure. All right, let's see. We had a question here on the Euro Kiwi. Let's go ahead and take a look at the Euro Kiwi and see what we can come up with here. I'm just sort of giving you my viewpoints on these things today, but we will be doing more workshop stuff. And also, I got an announcement to make about the live streams towards the end of the stream. So go ahead and stay tuned. We got to look at the Swissy too. Let me see. Euro Kiwi. So if I'm interested in trading this, the first thing that I would say is, number one, back off your time frames. Why? Because this is relatively tight. We're not seeing a huge amount of price action here. Okay, this is easy for me. March's high, we broke above March's high. I believe the last time we covered this, we talked about how important that was, and then you saw the massive run up. Right now, you can see that this area, not really technically valid anymore, 91.68. I'm not really into it, but spike low there with a nice, beautiful pullback. What could you do? You're right at 38%, which is at 193.04. Right now we're at 193.04. So for me, I mean, it just is. It would be relatively simple. Put a little bit of money on it, I guess. Whatever we're trying to get done there. Let's go ahead and buy it. Buy the market. Now, why did we just buy the market? A couple of reasons. We don't need March's high anymore. We already broke out. This right here is really a clear-cut 3-month uptrend. Nice compression, breakout, secondary breakout. Now we're looking just to grab a pullback buy. That's it. We want to be long here. Now, why do we want to be long? It's not necessarily because I believe the Kiwi is a dog. I mean, the Kiwi is a pretty good currency, but as of late, there's been a lot of recessionary concerns about what's happening down in New Zealand. There's been sort of a dovish RBNZ where, as before, they were very, very hawkish, meaning they would rather have a high interest rate in a strong currency than a low interest rate in a weak one. So if I was trading this right now, I would be looking to buy the pullback there from right around 193.04, and we just did it. So we'll wait and see how this one pans out. For me, I don't really see much problem with taking that trade. Where would my stop out be? Well, I mean, that's going to be up to you. I mean, it depends on what you want to make. For me, I'm relatively flexible on I'm not really flexible on much of anything anymore, but you could probably risk 50 pips there and be all right. Stop loss down there, looking to get a nice bump, maybe a nice bullish bump up here somewhere, maybe 94, maybe 93.50. Maybe you want to shoot for like a 94 or a 94 and a quarter. Maybe put on a 1.5 to 1. What I don't want to do is I don't want to get in the way. In fact, if this level right here, if we don't get any bids, and actually the fractal nature of this move breaks down and starts getting real muddy in here, then I just want to get out, because if you do get that sell-off, is it worth holding for 300 pips? No, it's not. You could take a position here. That's expensive. I'm trading. I'm a trader. I want to manage my risk aggressively, and I want to see if we can make a little bit of money. And you can see right here, we're getting a little bit of a bullish bump. So let's take this down to a 4-hour and show you how to execute a trade using a macro level on a 4-hour. I love this. Okay, great. This is fantastic stuff. There's our level. There's our key zone. Okay, that's what I would call a hot zone. We came off of these highs up here. Bang, bang. Came down. Hit our level. Beautiful rally. Beautiful rally. What does that tell me? Number one, it tells me not to take a vacation because you don't make as much money. That's for darn sure. But it also tells me that this level's already been hit. So does that make our trade a higher risk trade? You betcha. Makes it a higher risk trade because those bidders were already there. They were already there and they were ready to rock, and they already brought a big profit here. Now the question is does this support level hold up? Potentially, yeah. Profit, my stop loss, I would augment it. I would put it right there, right beneath this swing low, which is, what is this going to put us on the hook for? Let's see, we've got 93, somewhere right in there, and 92.08. So roughly, probably about 100 pips, something like that. So if you're going to take that trade, I got to get at least a 1-to-1, and it needs to look something like that. That's if you want to lock in. Now remember, that's going to be last week's low. So you're going to be right now. It might not be last week's low. Let me look. That's pretty close. Yeah. Be last week's low. That'll be your stop out point. You don't want to be around if that breaks. If that level does taken out, that swing low's taken out, then you're going to move much lower. But look, we're getting a little bit of love here. We're getting some help on our bids. That's for sure. All right, one last one, guys. I want to look at the Swissy, and then the U.S. dollar just absolutely getting crushed right now. The dollar index beneath 100. One of the reasons why is because of the Swissy. Remember, that dollar index is sort of a basket of these currencies. So you're talking Swissy, you're talking Great Britain pound, you're talking Euro USD. This would be one of the trades that I would be watching for the week. Now, we just sort of put on a little swing trade there for that Euro Kiwi. That trade's going to be pretty good. I think that one's going to be just fine. US 100, we sort of showed you what levels to look at there. Gold, I mean, you got to be looking to trade gold as well on a pullback. This is interesting to me. I love the Swissy. I think when the Swissy moves, you don't need to get in its way. And what you have here is really a historic move that's developed during April of 2025. Now, this low right there, that spike low was one that we had outlined and we were watching relatively closely. Remember, markets have memories. Markets have memories. What's that low looking like? That low right there, 83.50. Okay, we bounced off of that low twice right there. Bang, nice big move. Bang, nice big move. This monthly double bottom is now gone, and the market is rolling. The next big level that I would be looking at to be potentially a support zone, believe it or not, is going to be those COVID crazy lows down there, and that is way down the queue. So for me, if I believe that we're going to test these lows, I want to be short. And this would probably be my number one swing trade of the week. When we talk about the week ahead and opportunities, boy, it's hard not to look at the Swissy and just lick your lips right there weekly. Last week's low, I'm selling pullbacks all day long. 38% up there around 83, 86. I would be looking to take that. No, without question. Now, do we get a 230-point rally? Probably not. Probably not. So what am I going to have to do? Well, it's trading. We always make decisions when we trade. We trade away security for the potential of profitability. So you can see where this action was right in this compression. Then we finally broke. The wheels are off. I mean, I believe in joining trends. I don't believe in trying to bet against them. $83.19. Pretty good trade. What was earlier today? What did we get on the top? $82.68. If we do push higher and we end up pushing higher in the next day or two, I would be watching that 38% relatively closely. Now, if we do peak beneath last week's low, you just adjust your Fibonacci's accordingly. But you want to be a seller at the 38% pullbacks. You don't want to be a buyer. You want to be a seller. And the reason why is we're trending, and when the Swissy trends, get out of the way. Now, if you want to try to pick a bottom on something as crazy as this, and this would be crazy, guys. I'm not going to lie to you. You're fighting a stiff downtrend. And look at right here. I mean, if you're playing this without the RSI, look at this. Beautiful trade. You had a bid right there. Once this bid gave away in the 9, sort of got into a weave formation there. That's really difficult to trade. But once you finally got that break on the 4-hour, there it is. That's big money. That's big money. So if I'm a crossover trader and you're saying, okay, Shane, what do I have to do right now to be successful? I would say, number one, if you're even considering going long against the Swissy, you've got to wait for something to set up. I'd be watching that 4-hour chart close, this 920 crossover, get us down here. You're already deep into oversold territory at least once right there. You're oversold right now, no question about it. So what do we need? We need that 9 to cross over that 20 and give us a bid. That's the only way I would even consider taking a long against, or at least against the Swiss franc right now. I like following trends. I don't like fighting them. And you'll find that if you do this long enough, you'll start thinking the same way. All right, everybody, that's a lot of markets. That's sort of the week ahead. One last thing I'm going to show you here, and then we'll talk about the stream schedule. Shiba Inu. I've been having some heart palpitations for Shiba. This was a cryptocurrency that's sort of an altcoin. A lot of folks say, it's a dirt coin. It's nothing that's, ever going to bring any money. And I go, well, that's not true. These folks here got rich. There's bidders in this type of stuff. If you're going to trade something like an altcoin or a Shiba that really has no function in this world, I don't know what it's for other than speculation. Get a good price on it. If you are smart about your trade locations, understand your market dynamics, meaning price stagnates in an area of fair value, and then and then it'll search for another area, and then they'll debate up there, and then you're looking for another area of fair value, and then bam, you're trying to figure out what this thing's worth. Clearly, it's not worth much. It's not worth even a penny. That's great. But take a look at this down in here. You got a pretty darn good area of fair value somewhere right between, I would say, 10 and 7. Pretty good area of fair value there. We had a test of 10. Last week's low went right down to 10. About 10 and a quarter. And then you got really a beautiful bounce up there to about 12, 12.19, somewhere up in there. That's nice. That's 20%. I think we can do better here. I think once that 10 gives way, you can see right there, what's that low? 10. And listen, I'm just sort of rounding here. It's just some crazy decimal number, but right around that 10, that 10 handle, right there, what'd you get? Bounced there. Bounced there. Once 10 goes, this thing's going to run down into the 8s and the 7s, and I'm going to be there with bells on. See if we can grab a nice little maybe intermediate term crypto play, looking to maybe hold for 6 weeks or 2 months and grab that bounce from 7, maybe get that rally and double up to 15. And if we're lucky, maybe we get something crazy like this. That was just last year. There are bulls in this stuff, and when they come in and they bid, it's explosive. Would not surprise me at all to see something like this, test that area of fair value, and then just see just a major jam come into play. I'm interested. All of a sudden, I'm interested again. And how can't you be? If you're talking about buying down in here and potentially just getting on the right side of a sweep and unloading up around 25, you're talking about a 4-timer, maybe a 5X, 10X trade on that. That's a big deal. That's a big deal, that's for sure. All right, everybody, I'm going to go ahead and sign off for today. Our stream schedule for this week, it's going to be 3 streams like we did before I left on holiday. Next week, things are going to be changing. We're going to be streaming every day, and there's going to be a different place where you can find streams on select days. And I'll make sure that everybody that watches these knows exactly where to find these streams. If you have any questions at all, cruise on over to howtotrade.com, leave a message, send me a private message. Head into the trading room, send me a PM. I'll be sure to answer any questions you may have. And then also, if you have any questions, you can just leave them on our live YouTube chat as well, and I'll get ready. I'll get back to you. All right, everybody, I want to thank you for bringing me a little bit rusty. Been out of the saddle here for a week or so. It seems like if you miss a day in these markets, you've missed a lifetime. But I think we're going to just be just fine and be in for some really great trading. Trade safe, though, and be careful because right now it is crazy. It is crazy out there, but we've got some real good opportunities this week. I think that one in crude oil tops my list. So if you missed that one, be sure to go back and check out the stream on review. All right, Bobby, you're absolutely welcome. Mark Corp, always a pleasure, guys. Work hard, trade well, be smart. Be smart. Fortunes are won and lost right now. Don't lose yours. Trade the action well, and we'll talk soon. See you.